Welcome everybody to the Chinchilla Pickin' Podcast. It is July 28th, 2024 at 4:21 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by one and only Brandon Beaver. Brandon, how are you?
I'm good. Just trying to get myself a little organized here. We're working on. I just want to kind of give people a heads up as to what's coming. You were talking about the podcast we didn't get last week because of IT issues. We might have that coming up, right? But I also
Yes,
want to
because we
say this.
recorded it, but we couldn't get it uploaded. It was recorded.
Yeah. So it was Dave and Nick. I was out last week for some family, hanging out with family that was in town. My nephew's in town until today, actually. So we were hanging out with him and making up for some missed time with him. He lives in Arizona. With that being said, we're also trying to work on right now getting a situation where we can start live streaming on one of our social media platforms. So keep an eye out for that. Um, that's all I mean, what do you got going on right now, Dave? Because I'm working my butt off, and that's about my life right now.
Right? Man, Olympics are on. People are watching the Olympics. I don't see a spike in people betting on the Olympics. At least all the people who consistently bet on football, basketball, and all that. I've asked them, "Hey, are you guys wagering anything on these Olympics?" And everybody's saying no. So nobody's putting $10 on whether or not hot chocolate can win the dressage contests in the equestrian field, or the water polo teams. Whether or not someone actually has to be saved because they what all the stupid bets you see with NFL and all that. But no, nothing big coming on.
Wait a minute, they have to be saved?
No, that's
Like
never
they're
happened.
drowning?
That's never happened.
Oh,
That's
dang.
never happened,
Well, I was gonna
man.
say I might actually start watching the Olympics more.
Right? If that ever happened, I mean that's got to be like 1,000,000 to 1 payout there if you put down money on that. You might get people putting a lot of money on it too if you offer like really good odds like that. But yeah. Yeah, so I mean, no one's really betting on it, so there's no monetary gain that way. There was 28 million people tuning in for the opening ceremony on Friday, and that went off. There was some, political controversy, like always with those type of events, but we're not about that here. We're about stock and investments. Um, Other than that, nothing big really going on. Just not bad out. Everybody's been talking about the heat. It's not really bad. It's in the July into August, and in the United States, we have a lot of foreign listeners. In the United States, July, August, and September. That's our hot months. I mean, every single August that I've lived in Cincinnati, Ohio, we have had temperatures over 100 degrees. Every single August without fail.
Yeah.
So I don't want to hear people say it's 100 degrees. It's so hot. I'm like, dude, it's August.
Yeah.
It is
And
always
it,
this
so
hot.
so if you're one of those people that lives in the western states and you're like 100 degrees, I can put a winter coat on,
Right?
because it's 120 out there. Let me explain to you how heat is in Ohio. It's very humid. When you walk outside, it's like you're walking into a uh a kiln of sweat.
Yeah.
That's what the air is sweat essentially.
If it feels that way, like if you're in Phoenix, it's a drier heat.
Yeah.
And so, yes, it is hot, but it's a drier heat. It's a desert, same with Vegas. Drier heat. I used to live in San Diego, and that never really got hot, never really got cold. That was you want an easy job, go be a weatherman in San Diego. It is between 60 and 80 year round, and it rains 9 days a year. So you might get it wrong 9 days a year if you just throw up there, hey, it's gonna be between 60 and 80 and sunny.
Yeah.
Fuck,
Every
that's the
day,
easiest
every
job in the
day.
world.
Every day you just wake up and say it'll be 75 degrees today. And that's it.
That was wonderful living there for the weather wise. But oh man. Anyways, hey, you didn't come to listen about weather and our reports about where we traveled and what the temperatures were. You came to learn how to make money. And I want to help you guys. I want to help everybody learn how to make money. So let's get into it. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You're to lie back and forth, the bicker and the banter right here on the show. Brandon and I mentioned what I was going to talk about, and he said, "Oh, I disagree with you completely." So now we're going to have a nice back and forth. Well, I don't know if he said completely. I'm probably adding that in, but we're going to have a nice back and forth. But before we get to that, Brandon has some other news that we're not going to bicker about, probably, and I'll let you lead off with that.
What is it? I don't even know what it is.
You said some retail earnings or
No, so that's
consumer
actually my
discretionary.
subject. No, it's
Consumer discretionary.
no, consumer staples.
Staples. Thank you.
Staples, yeah. So we're going to talk
See,
about
I
that,
zoned out after you said
but
consumer staples. I'm like, oh, probably P&G or J&J or
well,
some of those.
this is my.
Am I
This is my.
right though? Is it one of those companies?
I mean, no. So we'll talk about Coca-Cola. We'll talk about Kimberly-Clark and Colgate-Palmolive and Nestle, and that's what. And there's a theme here with these.
Oh, well,
earnings
okay.
report.
You didn't mention the theme. I want to hear this. Go ahead. Please explain your theme.
Okay. Well, no, I want to get into the companies first. So here's how we're gonna roll. I'm gonna start with Coca-Cola, who is the dog here. I mean, not DOG, I mean DAWG. This is the dog. This is the one that beat it. This is the winner here. Okay, Coca-Cola outperformed its peers. They reported a 15% increase in second quarter organic sales. That's very high for Coca-Cola. Normally very steady, normally steady growth here, something that you should have in your portfolio, but not something that you're going to expect incredible amounts of growth here, right?
I mean, you don't get a lot of growth with Coca-Cola. You get a nice healthy dividend, which
Yes.
Warren Buffett uses that dividend to invest into other companies. So to him, it's a cash cow. It makes him
Yes.
money. That dividend pays him out, and then he uses that to buy other companies.
Right, right. So we've got a cautious consumer climate, but despite that, they demonstrated resilience by successfully implementing price increases. In contrast, PepsiCo experienced weaker pricing. They had a 3% decline in North America beverage volume, 1% revenue increase for the segment. Coca-Cola stock remained kind of stable right after the report, but they climbed over the week, hit new record highs. In North America, however, unit case volume for Coca-Cola declined 1%. Growth in juice, value-added dairy, and plant-based beverages was more than offset by declines in water, sports, coffee, and tea, trademark Coca-Cola, and sparkling flavors. The price mix grew 11% for the segment. This was driven by a favorable mix and pricing actions in the marketplace. So price increases here kind of driving the growth a little bit for Coca-Cola. Concentrate sales were in line with unit case volume, so that was about right around the same growth there. Consolidated operating income that grew 10%. This included items impacting comparability and a 16-point currency headwind. So you had the currency headwind, but Coca-Cola still outperforming here. Comparable currency neutral operating income that grew 18%. This was driven by organic revenue growth across all operating segments, kind of offset a little bit by an increase in marketing investments. Comparable operating margin was 32.8% versus 31.6% in the previous year. Operating margin expansion was primarily driven by strong business performance and the impact of refranchising bottling operations, partially offset by currency headwinds, so to speak. So here we have mostly good, little mixed, the weakness in North America. The weakness was here in North America. I said this belongs in your portfolio, but I do think you want a decline in the price. Here's how I want you to play Coke. And this is the best part about Coca-Cola is that you don't have to buy directly into the stock to play the stock itself. They've got bottlers, right? And a lot of those bottlers have stocks. So FEMSA is the Mexican bottler for Coca-Cola. It's a Mexican multinational beverage and retail company. This is headquartered in Monterrey, Mexico. It's best known as being a Coca-Cola bottling business, but here in the United States, what people don't know, they're a large owner of convenience stores. You got something to say, Dave? I think you kind of look like you want to chime in here.
No, I was gonna correct your pronunciation of Monterey.
Oh, Monterrey.
Monterey.
Monterey. Okay.
Now I have nothing of use to say about Coca-Cola or its bottlers. Sorry, go ahead.
So the bottling division accounts for approximately only 1/3 of the sales. Mexico serves as its primary market. FEMSA operates through Latin America, offering a range of products from classic Coke to sugarless beverages and energy drinks. Notably, the bottling division boosts industry-leading earnings before interest, taxes, depreciation, EBITDA. Yeah, and the margins are about 19% here. The real growth here is going to lie in their convenience store business. Their convenience store is called OXXO. Each day, 1 in 10 Mexicans visits one of the 23,000 plus OXXO locations in the country. FEMSA is expanding the convenience store chain across Latin America. They have plans to eventually enter the United States market. In 2024 alone, FEMSA aims to open approximately 1,000 new stores in Mexico. Additionally, they just recently opened their 500th store in Brazil and Colombia. Given the fragmented state of the convenience store industry here in the United States, I think they've got a good opportunity. A well-funded conglomerate to come into the convenience store industry here in the United States, especially maybe in Texas, where it might be a little bit more of a nostalgia for expatriates of Mexico people. I know I said it wrong.
You're good,
Okay,
man. You're doing very well. I want to see you walk this line here. Go ahead.
people that move from Mexico to the United States, people that might remember OXXO from where they grew up, people who might know the brand, right?
Expatriates was great.
But whatever. What do they call it? Isn't that
Expats.
what you
Just say
do?
expat.
Expat.
I always just say expats. Whenever I
Okay,
talk
so
about someone coming from another country to another country, it's always expats. That's the most commonly generally used term because you could use it for any country, any nationality, any person, anywhere. It's just expat.
also say Tom Brady is an expatriate. Okay, whatever. Crickets. Anyways, Pim says like I said, they operate throughout Latin America, but this is kind of where the real growth is going to come from. I think they've got a good advantage of capturing market share from smaller rivals here in the United States, is what I'm trying to get when they come here.
Maybe. I mean, like you said, staying in California, Arizona, New Mexico, Texas, those particular states offers an advantage. I don't know. There's a strong U.S. presence with a lot of money behind them, so who knows? And Speed Marathon just
But
got
did
bought
you?
out by 7-Eleven,
Yeah.
so there's no more speedways. They're now going to be all be 7-Elevens here shortly. So if you have speedway points, I don't know, maybe at some point you need to use them up because if you don't know speedway and you're on the West Coast, one of our West Coast listeners, there's no speedways out there, but that was a big chain out here, and there was really no 7-Elevens out here. So 7-Eleven just went ahead and bought all the speedways in this part
Yeah,
of.
what they need to do here on the East Coast, if they can, if they're allowed to, if there's no monopoly of rules guarding them from doing such, they need to keep it Speedway here on the East Coast because everybody knows Speedway coffee. Nobody wants to go get a 7-Eleven coffee here on the East Coast. The Speedway coffee's good.
As a coffee snob, I do not love Speedway coffee.
Really?
Yeah, no.
Okay. Well, I tell you what, who you would really love. I don't know if you've been to a Pilot or not for their coffee, but that's
When I've gone on
that's
road trips,
yeah.
I've had to I've had to drive for certain emergencies across the country, and at last minute couldn't get a plane ticket. Um, yeah, pilots. I've had their coffee. It's not, again, it kept me awake. That's
It's
they.
owned by, but they've got all kinds of different flavors and stuff, and it's owned by Warren Buffett. Pilot is owned by Warren
Okay, that's why you like it. All right, gotcha.
Buffett. Well, also I didn't even know about Pilot's coffee. We would go down to Tennessee whenever we can. We haven't been able to do it for the past couple of years because of issues, but usually we go there once a year, down to Norris Lake and around the surrounding areas where my girlfriend's aunt lives. And my girlfriend, the first time we went down there, she's like, "Have you ever had Pilot coffee?" And I'm like, "No, I've never had it." Which we gotta stop. We gotta go because she loves it. So that's how I heard about it. Um, So yeah, I think that FEMSA, and by the way, it's based in Mexico, so this is an ADR, but I think that's the way to play Coca-Cola. You can also look at any of the other bottling plants, anything, and maybe do your research, see if you can find one that's a good of value there. But I can't justify a 27% price to earnings ratio on Coca-Cola right now, so I'm not buying it at the current price, but I will go in and buy FEMSA as a play on it. Are you still there? Did you freeze? I think you may have frozen on me.
Working. So
Oh, there you go. All right. All
now
right.
you have to edit that out because you talked. As long as you can hear me, we're good.
Yeah, we're good now. So Nestle, another one that I wanted to cover. I don't think I actually mentioned this one at the beginning of the program. They rebounded in the second quarter. They achieved 2.2% growth in internal sales volume after a contraction in the first quarter. Investors are expressing concerns here, though, about pricing. The price increases slowed significantly compared to the prior period, and the company adjusted its full year organic sales forecast downward due to unexpected pricing challenges in mostly the United States. Go ahead, Dave.
We covered the pricing challenges in Q1 on the podcast. We talked extensively about it. I first reported this in Q4 of last year on this podcast, and I've talked about the price of cocoa. It's a commodity play. The price of chocolate around the world went up due to certain markets in Africa not producing almost any chocolate, which they were dependent upon for the price. So the price went ahead and went over like almost tripled, quadrupled the price of chocolate.
Yeah.
And so that was going to hit Nestle's bottom line because their profit margin wasn't that big, being a chocolate bar. I don't know what your profit margin is. And so they were going to have to raise prices. And the question in Q1 that I put out there, I'll just say was, are they either going to raise prices? Or are they going to get control of the commodity price? How are they going to navigate this? Because I don't see that going back down in price until those fields get reopened back up and they start producing again.
Well, here's another. Okay, so here's what the chief executive said. There is stress in particular at the low end of the income scale in North America, also in select other geographies, but he's specifically pointing out North America. He said people are value seeking. Promotional intensity has been particularly strong. So all three of these companies, really two, because I've just covered Coca-Cola and Nestle so far. The pricing pressure in the United States because the consumer does not want to spend is what they're saying.
Yeah, and well, here's the thing too. And all right, I could go down a slope right here and take it right into the topic I want to cover just from that statement. The consumer does not want to spend.
I got two more companies to go into though.
You say that, but we could talk 20 minutes back and forth
So,
bickering about this whole next thing, and that could be the whole rest of the show.
Let me just say this: Kimberly-Clark, 4% organic sales growth in QT. I'm gonna go through this quick. Analysts expecting 5.1%, so just a little miss. CEO of Kimberly-Clark said that a return to pre-COVID promotional levels in the United States. This means discounts, lower pricing. He said we're returning to pre-COVID promotional levels. That's not a bad thing, by the way, for the consumer altogether, but might be for the overall economy. Shares declined by 5.7% on the earnings announcement. Colgate-Palmolive, strong 9% organic sales growth in the quarter. Value growth was 4.7%. This was the highest since the pandemic surge in 2020. Pricing growth at 4.2%. However, there were cautionary notes about pricing in the United States, which fell 3.3%. We're starting to see deflationary pressures here, is what I'm saying.
Hold on. So Colgate, let's go back to Colgate numbers there, man. You're saying that they raised prices overall 4.2%, but in the United States they lowered prices?
Yes.
Is that how I'm reading that number? Did I hear that correctly?
Yeah. So he said cautionary notes about pricing in the United States, which fell by 3.3%. Yes. So globally, price is still going up, but here in the United States, there's pressure.
Because consumers aren't going to pay out all that kind of money for for these products. They got to find a different way in order to make them or cut costs. And you know what, man,
And they announced new
it's
plans to increase promotions, meaning discounts.
yeah. And it's so hard not to go ahead and just start talking about this because we have so many different angles to cover when we get into this. But
So,
what's your point you want to make with these
so,
companies
so
as a
the
whole?
point is Coca-Cola, Nestle, Kimberly Clark, the Kleenex maker, Colgate, Palmolive all say pricing pressures here in the United States are going to be weighing on them. The issues here with pricing pressures are coming primarily from the United States. To me, that says possible rate cuts on a microeconomic level. To me, it says turning the page on inflation, which is a good thing, but it also could mean possible deflation in the future. Possible recession. I mean, I'm not saying it won't be a soft landing, but I think right now we are in the period, according to the consumer staples here, where we're about to find out if the soft landing is going to be a real thing or not, or if it's going to be a recession here in the next couple of months.
Okay, I really wanted to interrupt you like 5 times during that last couple sentences you talked right there. So first off, man, I forgot totally where I was going to go with that. I will say this. I will say this. I want to start. I want to start the discussion with the GDP. Let's start there, right?
Okay.
Because there's so many angles we could go with everything. So let's start with some data, if you will, some data that just happened that we can agree upon. Because we can't argue it. It is what it is. GDP number came out this past week, and if to any of our listeners who don't know, the GDP number was a very solid, good number. It came in at 2.8%, which is much higher than anybody was saying that it would be. Even the top end people were not calling a 2.8% GDP number. And the no bull, no, and the Bears were definitely down there under 1%. So it was a big surprise to the upside as far as how the economy is going. And you can look into some of the contributors here. There's so much data I want to get through over the next 10 minutes with going back and forth with Brandon here, and then we'll let everybody listen in here. Brandon's points, my points, and then you guys make your own decision and do your own research. But so much data I want to get to. Some of the data I want to get into is the personal consumption expenditure, personal consumption expenditures price index, right?
Yeah.
So that increased 2.6% for the quarter, but it was actually down from Q1. But it increased year over year. Another key variable was final sales to domestic purchases. That was also an increase year over year. Now, some concerning things, right? Here's some of
Well, let me add this real quick. All of those could be masked by higher inflation.
Could be.
Every one of those things.
Could be. But here's where I think what's boosting these numbers, Brandon. You ready?
Yeah.
The report also indicated that personal savings rate continues to decelerate. So it decelerated at 3.5% for the quarter, compared with 3.8% in Q1. The Philadelphia Federal Reserve showed that credit card delinquencies at an all-time high, according to data going back to 2012. Revolving debt balances reached new high, even as banks reported tightening their credit standards and decline in new card originations. So they're not giving out any more new credit cards. They're tightening how much credit you got, how much your score you got to have, and all these other numbers. And we're still showing delinquencies reach up higher. However, retail sales have continued to climb, indicating that consumers are weathering the headwinds of high interest rates and persistent inflation. Because retail numbers are coming out, they're reported, and they're good, right? So when you look at this, right? There's some pressure in the housing market because the housing market still hasn't recovered. They're actually going down. That wasn't a good for the economy last quarter. That was a negative for the economy. So no matter which side of this you're on, that will be a negative one. The Labor Department reported that initial jobless claims were just 235,000, pretty average, not really high, not really low. So continuing claims were 1.8 million. Again, nothing outrageous there. Orders for durable goods fell 6.6% in June, compared with the forecast of a 0.3 increase. So that was a disappointing. New orders, though, increased 0.5% when you take out cars and autos and transportation. So that's some of the higher level view of some of these numbers that we're looking at, right? It's a mixed bag. So you could make the argument that credit card and debt and people pulling from the savings is what's keeping the economy so high. But Brandon, I want to give you a moment to speak because I know I just threw a lot at you.
You could also argue possibly that we might be at the breaking point right now where we're going to go one way or the other, supposedly, but it'll be a soft landing or a recession. It's not going to continue to go higher as far as I don't think as far as prices go. I think those are going to come down and they're going to, it looks like we've started to see some pricing pressures already. I think prices will continue to come down. I think that we're going to see some pressures here on the economy. We hope to see inflation come down with that as well. But you were talking about the retail sales being higher than expected, along with credit card expenditures being higher than expected. This could be like that breaking point that people are getting to the point right now where they can no longer afford to buy things.
Yeah. So some things, and where are you going to see those some things at though? I mean, we always have to buy food. We always have to buy gas. Those are things. And the oil cost per barrel has come down since last year. So that has come down, but it hasn't seen the same percent. The percentage at the cost of oil per barrel is not the same as the down in the cost of gallon per gas. They haven't correlated. So the cost of oil has dropped faster than the cost of gallon of gas. So where's that profit going? Where's that extra money going? The question I really want to put back at you. I mean, if the consumer in another quarter another quarter or two just can't use their credit cards anymore, credit card delinquencies are going to happen. What are we going to do? What's the consequence of that, Brandon? If that's where you believe we're going.
So I would normally say that the consumer staples would be the safety play here, but it doesn't look like the market right now is agreeing with me. We just had a lot of people cycle out of the big tech trades that have done so well over the past couple of years, but that trade got really, really crowded, right? So people started cycling out of it. Usually what they do is they buy into industrials and the consumer staples. They've completely skipped the consumer staples. Consumer staples over the past couple of months have gone nowhere.
It's because they're not sexy, man. You got to have NVIDIA. You got to have Tesla. It's not sexy to talk about Procter and Gamble and what do you say, Kimberly Clark or
but
Nestle.
they're selling the sexy stocks and they're going into other unsexy stocks that are in the industrials. The industrials and the banking right now are outperforming, while consumer staples have been completely skipped. So
I mean, yeah, a lot of the bank stocks have had 5 to 10% moves but they've been stale for years. They needed some movement, man. Besides the COVID drop and rebounce back up, if you look at it, and you take out that little small window of time, they've been at the same price. I mean, Bank of America has been around $30 a share for almost, I don't know, 8 years.
Yeah, it's just
so. I mean, they were due.
It's an interesting move to me. It's also it also seems that the consumer staples that are actually leading the pack, like Coca-Cola, have a more global presence.
But their stock is still at the same place it's been at. Again, take out the COVID year. It's been at the same 60 some odd dollars a share forever. It hasn't moved either. So I mean, I don't even consider that like a positive right there. So I want to go back to like.
Well, hold on. No, I mean it did just reach record highs, so it could break out. I don't know. It probably shouldn't at 27% price to earnings ratio, but it is record highs.
It's not going to break out. It's not.
The longest time it was just chilling like around 55, 60 a share. Now I think it's at 67 the last time I checked, but
Yeah, people buy that for the dividend, and that's if you have a lot of capital, like 7 figures or more to go in. Then you're going to get a nice, healthy dividend that you can use to fund other projects. That's only if you're at that level.
But
So,
also you could also, here's the other thing about Coca-Cola, and I'm sorry, but I don't mean to keep interrupting you, but also for people who have less money in their portfolios that are looking for a little bit more stability, that Coca-Cola may not be going higher, like some of the other high flying stocks, but also it's not going to have the same level of drop that those stocks are going to have too when people turn bearish on it.
buy a treasury bond, you get the same return.
Yeah, I mean that might be true as
A
well, but
Robinhood money market fund pays you 4.5%. Do you,
yeah,
do you see what I'm saying? Like,
yeah.
I don't need to put my money in Coca Cola. Here's my thing. I want to look back, and I might prove you. This might be more information on your side of the ball here, Brandon. Is that when you look at JB Hunt, they said that their intermodal trucking part dropped by 25%. That's what they were claiming when they reported their numbers. The intermodal, if for those listeners who don't understand, those are the containers that go from a cargo ship onto some sort of truck bed that it gets locked into, and then it gets delivered to the end site. So that's big shipping from a manufacturer to a actual retail store location. That's what that is. They said that they made up for that with gains in their LTL. LTL, for those of
Interesting.
you, so for those of you who are listening and you don't understand what LTL is, that's less than truckload. And that's usually when you're shipping, like I want to ship from my Cincinnati location and send something to my Cleveland location. That's usually what you're talking about. You're not talking about from a actual manufacturer to the retailer or to a big distribution center for like Walmart or something. That's not usually what you're talking about when you say LTL loads. Now, Old Dominion reported last week. Old Dominion also said similar things, that their main trucking lines where you're going from a big supplier to in distributor. In fact, I got the numbers up here. I don't want to say anything.
With LTL, you could also be going from the manufacturer to a warehouse.
So all right, here, hold on. Our second quarter revenue growth is 6.1%. This is from Old Dominion, a quote from them. Our second quarter revenue growth of 6.1% was primarily due to a 4.4% increase in LTL revenue per hundredweight and a 1.9% in LTL tons per day. The increase in LTL tons per day reflects a 3.1 increase in LTL shipments per day, even though it was partially offset by 1.2% decrease in weight per shipment. So they're seeing also a big jump in their LTL business. Now, shipping has a lot to do with if Walmart is ordering a ton of stuff for their companies, right? They're going to order it typically from China or some other country like that. That's going to be the intermodal trucking. The JB Hunt said they saw a 25% decrease in. So that means the orders at Walmart, Target, and all these other retailers are not making those orders in the same amount they thought they were. Now, if you listen to our podcast in Q1, we said that this was going to happen. Come here, now we're in Q3. You see that those type of shipments are going down. What you see in UPS reported a great Q2. Why did UPS stock drop right away? Because their guidance said we expect Q3 orders to be lower and we expect some headwinds. Now, why is UPS different from the major trucking industries? Why? Because UPS does the end business. When I go on Walmart.com and I buy something and they ship it, say UPS or FedEx, that comes from Walmart to me, not from China to Walmart. So that means that the end business was good in Q2, but as we saw that the credit card usage was actually higher, people were using their savings account to do that end business. UPS is saying our Q3 numbers are going to be lower. Walmart Target's buying fewer items, so their inventories are going to be lower, so they're not expecting as high sales. So when you look at that, you look at Q3 and you say Q3 is going to be a lower quarter based on all the trucking and transportation industries that I'm seeing. Does that paint do you think I was clear enough for people who are not familiar with the transportation industry to
Yeah, so
understand that?
here's the thing that's interesting about that is that domestic truckloads have been so freaking awful over the past 2 years the saving grace for companies like JB Hunt and XPO Logistics has been the overseas over air and the intermodal freight here. Where they're picking it up, putting it on a rail, or picking it up from the port and then putting it on a truck or whatever. The saving grace has been those things because the price on those didn't really come down all that much, and there was some growth in those areas as well. While domestic truckloads and LTL in particular got hit really, really, really hard. I mean, we all remember Yellow, the LTL company that just went out of business. Part of me wonders how much of JB Hunt's increase in the LTL came from former Yellow customers and if they're picking up that market share.
Estes picked up a lot of it. Estes is privately owned, not publicly traded. But yes, JB Hunt probably got parts of it, and so did Old Dominion and Saia. All these companies each picked up probably pieces.
Gotcha.
So because that was a huge company that just disappeared overnight, really.
Right.
But when I see this, and I see the GDP number was higher than everybody expected. Do we have a need to cut rates come Q3? You're worried about deflation. You're worried about the price coming down too much because people won't buy. But here's the thing is people are buying right now. Are they using credit cards? Yes. But they're still buying. And I think that the economy is not as bad. I feel that that you're painting the picture of it. And I'm wanting to say that, like, yeah, I see some headwinds, but I think these lower inventories are actually going to be good for companies like Walmart and Target because they're not going to be stuck having to slash the price of things in order to move the inventory out.
Yeah,
they're actually going to be set right. So I see the companies withstanding that just fine. Now the question is this going to reach the edge for the consumer? Last year I tried to say that we were close to tipping the edge and it never happened. So I'm not calling that anymore, man.
I think I am now because I'm starting to see it more strongly worded in the earnings reports of consumer staples in particular.
Right now I see an economy that's hot on fire and inflation is going down. So I look at those two things and I don't see a need to cut rates.
I guess we'll find out.
I think we are going to get a rate cut just because there's too many people pressuring the Fed for a rate cut.
I don't know. You said
I don't see a need for it, is what I said.
Highest credit card usage, somewhere probably record breaking.
According to the Philadelphia Federal Reserve, yes.
Yeah. To me, that says prices need to come down for people and that they're going to have to. That's what that tells me. I don't know that I would characterize me as necessarily being worried about it as much as saying this has to happen.
I used to say 2 years ago that this has to happen in order for everything to recover, because historically that would be correct. High inflation, we got to have the economy go through a bust period in order to recorrect. Now we had 2 quarters of negative GDP, and that's all we need for a technical recession, according to definition. 2 quarters of negative GDP, we had that. So you can make the case that we had our recession, and it put us on the right track for recovery.
I hope so. We had high levels of market intervention during COVID, and that can oftentimes be the big wrench that's thrown at the necessary reset. And it keeps us in limbo for a lot longer than what we should. See the 1970s, for example. High inflation, stagflation, lower employment levels wasn't good. So the economy was trying to reset itself, but it just couldn't because we kept getting in the way.
So if you look back to that period, did consumer staples rise?
Yeah, they did.
Because you're saying put money in consumer staples. If what you're saying is going to happen, you're saying put money in consumer staples.
You got to pick the winners.
Okay.
And for
here's what I'm saying, and I know you're going to roll your eyes, and you're not going to hate it. You're just going to roll your eyes at me and just be like so frustrated with this. But I'm going to say Bitcoin.
Well, I
I'm
mean,
sorry.
yeah, but look, you got a presidential candidate right now that's wanting to get a U.S. stockpile of Bitcoin.
And we already do. The Border
Well, I mean,
Patrol already has tens of thousands of Bitcoins. The U.S. federal government already is the one country in the world with the biggest supply of Bitcoins that it holds. They already do. They already do.
yeah, but he's talking like Fort Knox style, which honestly I like on one hand, but the other hand concerns me a little bit because it gives them an upper hand in manipulating the price of Bitcoin, which is exactly what they did with gold.
And Germany's trying to unwind its hold of Bitcoin. But that's not just coming from him. U.S. Senator Cynthia Lummis plans to introduce legislation calling for a strategic Bitcoin reserve that will reduce the national debt of the United States by buying 1 million Bitcoin over the course of 5 years. The quote from the senator is, "This is the solution. This is the answer. This is our Louisiana Purchase moment," the Wyoming senator said on stage after former President Donald Trump spoke and endorsed the idea of a Bitcoin reserve.
Also
That's a
gives the
U.S.
U.S.
senator
government,
saying that.
it also gives the U.S. government leverage on the price of Bitcoin versus the dollar, and it's a little concerning to me.
Right? So here's my thing. At the beginning of the year, I said Bitcoin's going to be at 75.80. I still call that. It's still going to hit that mark. It got close to it already. So if you bought it at the beginning of the year and listened to our podcast in January and you said, "Oh, Dave, let me throw some money in there. If it hits that, that's great. Congratulations. It came close to already hitting and it's going to hit it by the end of the year."
Yeah.
I said it would end up higher, and it's currently on track to end up higher. A couple other things, because we got to call out our winners. If we don't ever call out our winners, all you ever remember is us for our losers, which we have some. We're human. But some of the winners was I mentioned that I don't trust Tesla going into August. I think they're going to miss on earnings on their numbers. I even posted in our group chat, Brandon. I said, I'm selling Teslas now. I'm taking my profit off because I think they're going to miss on numbers going in. I said that in our group chat. I said on the podcast. Sure enough, they missed on the first earnings call in August when they had that release. I don't think they're going to hit on that release for the software. I think there's going to be a delay. It's not going to work with all models. There's going to be some kind of problem. The stock's going to drop like 30, 40 points. It's at that moment is when you want to buy. You want to wait for all those drops and those negative news to happen. And then you want to get back in because they're going to fix those things, guys.
Yeah.
This not going to be a permanent downpour. They're going to fix it and they're going to be back on top. So,
it's funny you mentioned that because I'm actually starting to rethink my position on Nike right now.
Yeah, Nike's done horrible. When did you start your position on? Sorry to laugh at you. When did you start your position on Nike?
No, I haven't started a position on it.
Okay,
I
wouldn't.
Show me.
Yeah,
but it's not going to be horrible forever. They're going to have to fix it.
They are going to have to fix it. There's a lot of issues there. There's a lot of underlying issues at Nike, but we're not talking about Nike. So Tesla's one I got right. Bitcoin, I'm still like, they have ups and downs, right? They always do. And in a stock that's volatile like that, I stay with the ETF that I'm currently holding, CONY ETF. Brandon, still not a believer in it like I am. They have options for puts and calls. So as the stock moves down, sometimes they get positive on their puts. They sell that money. As the stock moves back up, they get positive on their calls. They sell, make that money, and they keep making money consistently. And I love this ETF. It's a income yielding ETF. I own it. I believe in it. My daughter owns it, so I'm telling my family to buy it. It's a great investment.
Here's my negativity on that. I think it's
Go ahead.
Risky. I think it's too risky. Those calls that they're buying and selling are already priced in for expected volatility. That's how the options work. You're priced for the expected volatility. So the way that they're going to continue to make money is to continue to making money on buying options that have incorrect volatility priced into them. So
there's always volatility on Bitcoin. That's my pushback. It's Bitcoin. There's volatility every other week.
Yeah, I know, but so the volatility that has to happen has to be outside of what's already expected, either more or better.
No,
yeah,
I disagree.
It does because
it doesn't.
How do you pay for options?
You pay the premium price for the options.
Yes, which is based on the volatility of the stock and the expected volatility.
and it's not priced into the price that they're buying it at because
Yeah, it is.
they have to list they have to list their that they currently holdings they currently hold. And if you notice, all of a sudden one day one pops up, you can look at the price that it was yesterday because they bought it the day before, and you can say, hey, that option when they bought it yesterday, premium price was X amount, and then you could watch it and you could track it. And so far they've been doing well.
Yeah. I mean, that's good, but they have to continue to do well on doing that. It can be very hard to do with options.
Now here's the thing, here's the problem I have. Here's where you could be you're more right than you realize, and this is what I say to people who are looking to set up a 401k and they've never set up a 401k before. I say when you're looking at a fund for a 401k, and this applies to this ETF as well, because you got to watch it, and here's why. When you're looking to set up a fund for a 401k, I want a 401k fund that's been around longer than 10 years and has consistently produced results for that over that 10 years plus time at the same exact rate all 10 years. Here's why. You have a great fund. So Fidelity had a great fund back in the day, Magellan Fund. Awesome fund. And I may have it mistaken with a different fund mixed up in my
I
head here,
think you're
but
right. I think you're right.
and that fund was doing amazing. Great. Fund manager left, started his own hedge fund. Magellan Fund tanked. Why? It was the fund manager. So if you have a fund that's been around for 10 plus years or longer and has consistently produced results, the company, say Fidelity is in my example here, the company Fidelity is going to continue to put their top performers into that fund to keep it consistently producing results.
Yeah.
The problem with these ETF funds is they're all new. So, yes, Brandon, the fund manager that's currently in this fund watching the one that I'm invested in, they could move on and start their own hedge fund eventually, and then the next one may not be as good.
So
That's a possibility. So you have to watch them.
here's where you could be right. I'm going to give you this one. When you have something that's as highly volatile as Bitcoin, the option pricing fluctuates up and down, and you can spot those anomalies and catch it when the price is not really like, okay, this is incorrect. The price shouldn't be where it's at right now, and either your put or call, whichever way you're playing it, is going to be profitable at some point in time, right?
Yes.
Two things: they have to continue doing this week after week
Yes.
after week after week. And then and the second thing to this is what happens if Bitcoin's volatility cools and the fluctuations in the price of the options starts to flatline a little bit.
Then I mean you get a smaller dividend, but at least it's probably a more consistent dividend. You could probably bank on that dividend more than you could the one we're getting. The one because the dividend we're getting now can vary by as much as $1 per share.
Yeah.
And
Time could prove me absolutely incorrect on this. But if it proves me right, then I don't know. Here's the thing. If they stop making money on these options and it goes to zero, then where are we at?
that's like somebody saying, hey, everybody's out to get me, and I'm only crazy if I'm not right. It's like, okay, yeah, yeah.
I'm not Alex Jones.
Right. All right. Well, I mean, yeah, you guys have heard us go back and forth in this, whether or not you believe the economy is going to go good, going to go bad. We've given you some options to invest with. We've given you some good ideas. Brandon actually made some calls and on the show today. I made some calls. Now some of them are calls of, hey, I'm not buying this until it shows me something. But that's a call.
Yeah,
So
you really have to dig in this market right now. I mean, even after
get into your final thought, because that's where I was going with this. So final thought.
even after people cycled out of tech right now, which is probably a temporary thing, especially if we get a rate cut in, I don't know, what, September, is that what we're looking at?
Yes, that is the timeline, September.
Okay, if we get a rate cut, then people are going to cycle right back into tech, unless we have a recession, right? That's happening at that point in time. But if there's a rate cut, they're going to go right back into tech. I read some news today that, when we cycled out of tech because of stupid valuations, don't lump all of the tech companies. Not everybody had a stupid valuation. Some did, but not everybody. But we still have to really dig deep in this market right now because there's a lot of stocks that are overpriced. I had to dig deep and find a company in Monterrey, Mexico. Monterrey. Monterrey.
You're good. You're good. You're good.
Use your watch lists. This is a research intensive environment if you're going to be successful for the next 6 months. That's my final thought.
Nice. Buen trabajo, mi hermano. All right. My final thought is last week I mentioned on the podcast that we recorded, and since it didn't get published, no one had a chance to hear it, so I'm going to say it again. I sold my Novo Nordisk stake. I believe there are too many headwinds going forward. There's been too much news week after week that I don't believe Novo Nordisk is going to hit the price target I gave it at the end of last year when I bought it. I said there's a chance it could double. I believed in the hype. I made a lot of money off of it. I was very happy with my return, but I exited my Novo Nordisk, my full stake in Novo Nordisk. And I just believe that there's too much going against it. So I just want to make sure that I know this one's going to get published and put out there. So I want everyone to hear that first and foremost. And then Bitcoin, I continue to watch that, and I make day trades every now and then on it. Now with my Novo Nordisk money, I'm taking my profit from that, and I'm putting it into these income ETFs that I was just talking about with Brandon. And my principal is going to be reinvested. So I'm sitting on cash, and I don't have an investment yet. Like Brandon's saying, it's very hard, and you have to be picky in this environment. And I don't see anything I want to put my money in. And I just want to let you know there's no reason to rush to invest in something if you're not 100% committed. And
Right.
I don't have anything right now.
Exactly. Yeah, you don't always have to, but sometimes it's better just to sit on your hands.
Right. All right. So that's our show. So as always, we hope we have been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.